Thank you, Daniel. And welcome everybody to the last session of the day. Hopefully everyone is still focused and willing to participate. And as Daniel said, this is crypto. So we're quite a talkative community and welcome discussion. And naturally love to collaborate and support any of the questions that you may have. I'll introduce myself quickly and then I'll bring the panel in. My name is Ian Taylor. I'm the Executive Director of CryptoUK. CryptoUK is the UK's trade body. A trade body, as most of you will know, is generally a not-for-profit, member-led organisation, which main objective is to advocate for fair and balanced regulation. We work specifically with the UK government to help them understand what's happening in the crypto space, but also we work on a number of other issues such as consumer harms, advertising, illicit finance, but also try and really help senior politicians and members of different agencies in the UK understand the benefits that crypto will bring, and hopefully we'll dive into some of that today. Okay, so before I bring the panelists in, I'll just set the scene. This is a panel on the future of crypto exchanges. I think we'll all agree that the last 2 years, we've seen a real rapid adoption of crypto, whether that's on the retail side, and I'll quote the FCA, the UK's Financial Conduct Authority. They released some summer research that stated overall public awareness had increased significantly, and they estimated in their research that ownership had increased up to 2.3 million adults in the UK from 1.9 million in 2020. And they believe that nearly 80% of adults have now heard of cryptocurrencies. And then on the institutional arena, we've seen a very large increase just in the last 12 months. At CryptoUK, we're seeing many institutional questions from banks, from payment providers, from law firms, consulting firms, not to mention many of the brand names, global brand names, you'll know, PayPal, Square, Visa, all providing services or holding crypto on their balance sheet. And now exchanges, to the topic of today's discussion. Exchanges were, if you like, the first real major market participant. Naturally, they provided access to digital assets for both retail and institutions. At CryptoUK, exchanges were our founding members. So that's what we've seen behind us. Let's sort of dive into the topic of the future of exchanges. What will that future look like? Will we see consolidation? Will we see banking license being forced on exchanges or something else? Okay, so let's bring in our illustrious panel. Firstly, if I could just ask each of you to give a brief introduction about yourselves. And I'll start with Edgar, please.
Sure, thank you very much, Ian. Well, my name is Edgar Plascencia. I'm Business Development Manager for Europe and LATAM. Pretty much I'm doing expansion here in Spain right now at the moment. I work for Bitget, which is a crypto exchange based on Singapore. So yeah, right now what we are trying to do here in Europe and Latin America, it's for everyone to know our brand and try to expand ourselves. I will explain you a little bit later all our new features, and all our new gadgets. So yeah, pretty excited to be here, and thank you very much.
Thank you, Edgar. And let's ask Jeff May to introduce himself next.
Okay, hey, it's great to be here. My name is Jeff, and I'm heading global strategy for Hobi. So really what it is all our expansion to all our global markets, I'm heading these initiatives. And then I'm really on the marketing side, that's one stance. And the other side is all of our different products, right? Hobi is an entire ecosystem with mining, with DeFi, with our NFT marketplace, our exchange, spot trading futures. So with expansion, it's really handling all of these products and seeing how they can get into our global market. So right now, we have users in 130 different countries and regions and global hubs in about 20 places right now. So I'm really helping do all this. Right now I'm in Singapore. I'm a Los Angeles native, and right now I'm operating out of Singapore.
Thank you, Jeff. Pleasure to have you with us today. And next, Oliver.
Thanks, Ian. Can you hear me well? Okay, perfect. Hi, everyone. So I'm Oliver Yates, and I'm the CEO of SheeldMarket. We're one of the leading electronic prime brokers for cryptocurrency, and we're based out of Paris, France. So actually, as part of our activity, we're plugged into some of the major exchanges like Hobi to source liquidity for our customers. Happy to be here.
Thank you, Oliver. And our fourth panelist, Rodolfo.
Hi, everybody. I'm Rodolfo, Rod, for it's easier to remember. I'm a business development manager in the crypto team at Revolut. Hopefully, you know Revolut is one of the largest fintech in Europe, and we offer both banking and crypto services. Very excited to be here for this interesting conversation.
Thank you to our panelists. Okay, let's get into our questions. So first question to Oliver, please. As a user of an exchange, coming from an institutional perspective, perhaps start by telling us how exchanges, in your experience, have evolved in the last couple of years. Perhaps talk to the different products and features and services on exchanges now. And then move on to the issues that you see that perhaps need addressing to enable greater adoption and some of the questions that you see from your clients.
Sure. So the first thing is that I'm going to address this question as a user of an exchange, but so we're an institutional user in the sense that we deal in large volumes and our customers are mainly funds and other brokers. So that's our point of view. It could be very different for a retail customer. And also, if I ask this question to people on my team, the answer is going to be very different based on if I'm speaking to people on the tech or the trading team, or if I'm speaking to people on the operations and the back office team. Very different answers there. So starting with what improved in the past 2 years, first thing is most of the top exchanges at least have reduced wash trading. This was something that was revealed in a lot of research articles, plague in the crypto space, and if you look at it now, it's almost non-existent. So this is great for the overall image of the crypto ecosystem, especially when you're pitching to more traditional players. Also, the user interfaces they're more friendly. I'd say that's from my personal experience going on these exchanges. Even though we mainly use the back office, we don't trade on the trading interface. It's still more friendly. And then more importantly, you have a very high variety of features that don't exist in traditional exchanges, but since crypto exchanges are kind of central hubs for everything crypto related, they've been adding obviously everything around staking, mining, yields, and always this idea that from your single account you're able to access all of those products seamlessly, which is great. And also there's exchanges have been venturing into the DeFi space, thinking about the Binance chain, for example. Maybe you have others, but the idea being that it's kind of like a semi-centralized ecosystem to try out DeFi stuff, I guess. And it's also new, but gives more opportunity for investments and to try out things that are a bit more sophisticated than simply buying Bitcoin. Also, some exchanges are currently part of ecosystems like Fireblocks ecosystem, for example, that makes integration a bit simpler for players that want to plug into them. It's less of a hassle. And I'd say that from our experience, the support personnel, the communities locally in each country have much improved. You have a lot of people now, for example, in France, but in other countries, with you can speak with them, you have actual contact. And I think it's great when you're an institutional customer or a pro customer to have that. Now, these are mainly things that would be said by the tech and the trading people on my team. And then if I turn around and I go and speak to the ops guys, what I'd see is that overall back office hasn't improved much. It's still very unstable. So for example, currently there is no nominal access. When you're a pro user, you need governance. You need nominal access for different employees on your team because they won't have the same rights. Some people have the right to deposit, some need to have the right to trade, and this is very hard to find on the most liquid exchanges. So we kind of have to manage all of that ourselves. It's really tough. Also, a big issue that it's not really the exchange's fault, it's just the ecosystem's fault, I guess, but there is no clearinghouse right now. So counterparty risk still exists, and it's really tough for traditional brokers to understand how they can plug into exchanges because they kind of have to take everything on themselves, the risk, the custody, all of it. And I think that's something that's just still missing from the overall exchange ecosystem, and one of the main reasons why some people directly go to over-the-counter trading desks. And then you'll have, some exchanges instead of that will offer credit lines, but most of the time when you're using those credit lines, you're not trading on the same order books as the other customers. It's not the same experience. They're very limited. It's not your margining won't work on the different assets you're trading. So it's still in its infancy. And this is an issue. Credit in general is an issue in the trading ecosystem for crypto. Something else that comes up and again, mostly from the ops team is that the APIs are still very much retail oriented. And what I mean by that is that the documentation is not that straightforward. The APIs are still unstable, and they're all REST APIs using JSON, which is not the fastest way to transmit information in the financial sector, but still, it's the norm in crypto, so that's what we use. Another big issue is that ultimately, a lot of the activity in crypto is on-ramping or off-ramping to and from euro or dollar or yen or whatever. And that means that the exchanges have to be plugged into the major banking networks. And it's still not the case for most exchanges. Getting from and to dollar, for example, or euro, even worse, to crypto, you need several steps. This is something that we offer, but that means that we have to kind of do all those operations on our side. And also one of the main reasons why people sometimes go to OTC desks directly to trade from euro to Bitcoin, from dollar to Bitcoin. And finally, there's another aspect that's super important, is that the legal structure of most of these exchanges is very difficult to understand by a traditional compliance department. When a company like ours plugs into an exchange, we have to KYB the exchange, and it's still very tough. And we have rules from our regulators. We're a regulated prime broker, so we have those rules that come onto us, and so it's quite tough. Now, what I'd say is being done right now to the rest of those issues, the first one is that you have cross-margin solutions that are being developed either by the exchanges themselves to allow seamless trading across all the assets on margin, or by third-party brokers like ourselves or others. But ultimately, it's still improving. It's defragmenting the exchange market. And the other aspect is that a lot of the major exchanges are now filing for regulation in serious countries. So what I mean by that, for example, is a country that has a clear crypto framework. Most countries don't have a crypto framework yet. Even the US doesn't have a unified crypto framework, but some countries do. Switzerland, for example. So I'm thinking about Binance that announced that it's filing for registration in France right now. So you have this movement of, and it's not just Binance, it's most exchanges. They're moving out of the offshore space and onto more regulated spaces. And so ultimately, this will imply better performance because they have more requirements from the regulators in terms of the performance they have to offer. So yeah, that's my take on it, essentially.
Well, thank you very much for that, Oliver. That's super interesting. And I was just wanting to pick up on some of the sort of market integrity and market surveillance pieces that you mentioned. And wash trading was a big problem a while ago, but now has somewhat been solved. However, I do know from talking to policymakers that they're quite focused on this, especially around, say, protection for funds that are being put into centralized exchanges as staking products with interest-bearing offerings and how those client funds are protected and so on and so forth. So yeah, it'd be interesting to see how and you touched on the regulation, and we can dive into some more regulatory discussions later. But let's now turn the discussion over to Rod. And as you mentioned in your intro, you work at one of the largest fintechs, and Revolut are members of CryptoUK, and we work closely with them on a number of issues. And we know that Revolut has been offering crypto to its clients for quite a while now. So in your experience, how do you see the role of exchanges and banks operating in this current two-speed regulatory environment? And just to be clear for the audience, crypto exchanges in the UK at this time require 2 licenses to operate, and it's differs across jurisdictions, which is the new money laundering regime, which is the EU AMLD5, Anti-Money Laundering Directive 5, and an e-money electronic money license if indeed the exchange allows you to onboard with fiat. So that's the UK. But yeah, maybe over to you, Rod, with a greater expertise in this space.
Yeah, thank you, Jan. First of all, this is a super interesting question, right? One thing that I want to clarify, though, is that, of course, I can share my personal opinions, right? And I cannot talk for Revolut. This is clear. Look, I think that in general, exchanges are doing like a great job in increasing adoption. If we think about, let's say, retail clients, right? I mean, more and more these exchanges are converging in terms of services that they offer to banking offerings, right? But if you step a second and you understand how these companies operate, you realize that actually this is taking a little bit of a step back compared to what is basically the essence of blockchain and cryptocurrencies, which is, being decentralized, right? I think that, Bitcoin was born probably not willingly, but in a moment when people were a little bit mad at banks, because, it was right after and during the crisis. Many people had lost a lot of money that were deposited on banks and that they trusted a lot. And now, they were given the opportunity to have full control on their money, which is basically, if you have Bitcoin, you can simply decide where you want to transfer, to which address you want to transfer your money, and you have full control over that. You don't need any third party to do that for you. But on the other side, this was, of course, full control over your money, but control also means responsibility. And as we know, you have to take good care of your private keys. Otherwise, if you lose that, we heard many times the story of people buying Bitcoins and losing the hard drives and losing a lot of money, right? And so as soon as people were more attracted to crypto, exchanges seemed to be the right, let's say, compromise of having an exposure towards crypto, but also not have the responsibility of managing your own keys and your own money. And also, it was extremely easy to do that, right? So if you think about transacting on a blockchain, it's not rocket science, but it's not as easy as transferring money to an exchange and onboarding on the exchange and purchasing crypto on that. The only piece that was missing, initially the exchanges did a good job with people that were interested in actually investing in cryptocurrency as an asset to speculate. But as soon as adoption increased and people started to wanting to spend their money, exchanges had basically two possible solutions, right? On one side, keep everything as it was and allow people to withdraw their cryptocurrency, exchange to fiat, and spend money with their traditional bank, right? Or go into, let's say, offering more banking-like products like cards, and then after cards, borrowing, and then lending, and then of course crypto-specific products like staking, so on and so forth, right? But the focal point that people started missing is that these companies are not decentralized, even though many of them are now working to improve on that point, and are fully centralized. But they are, not all, of course, but they are under certain degrees, a little bit shady, meaning that the level of transparency that would be expected is not there. So what is happening is more and more people is pouring money in exchanges and taking on, let's say, credit risk that they don't realize they're taking, right? And so my suggestion, I'm not a believer in a strict and let's say violent regulation of exchanges. I don't think that is needed, right? But of course, as we are going towards that, as you mentioned, in many countries, the increase in transparency and accountability for these firms is necessary to avoid, let's say, a black hole risk of not knowing where this money go if by any chance exchange go bust, right? On the other side, we have banks, as you mentioned, and I think that banks are now facing different challenges, right? On one side, you have large incumbent banks that have some kind of also technical legacy, right? That it makes a little bit difficult for them to shift towards the digital asset world. And you have, let's say, smaller banks or newer banks that don't have probably the technical legacy, but along with larger banks are facing a regulatory environment that is, let's say, a little bit old and not up to speed with the way the world is changing. So my view is that in the short term, probably we see coexistence of the two worlds, right? Simply because, the way in which adoption is increasing is not, let's say, followed up by the way in which either banks or exchanges can offer the full package of, let's say, of products to their customers. But I think that we will reach a point in the future in which basically exchange and banks we will need to offer the same basically products, right? Because as adoption increases, on one side you have exchanges that will receive more and more pressure to make crypto available for use to their customers, and they are already moving in that direction, right? On the other side, you will have banks that more and more will need to offer crypto products to their customer. And they will need to do that to avoid basically failure, because if adoption increases and people more and more switch for digital assets compared to traditional assets, you will have to go there eventually. And I hope, but I'm pretty sure about this, that the regulation will support this. Otherwise, what you will have is having a full or at least a light regulated environment where the risk will increase tremendously. And the more regulated environment will be basically left dying because of not changing the regulation. So this is my take on where we're going in this two-speed environment, right?
Thank you very much for that, Rob. And I'll open up to the floor for a question as to where you folks think regulation should be. But I'll just give our audience a little insight as to some differences that we're witnessing across the globe. And with the work that we do with the UK regulators, some people in the community are saying exchanges are operating like banks. And we see the new products and services really develop in the last couple of years. I can remember when I first got into the policy space of crypto some 3 years ago, no exchanges were offering any interest-bearing products. And that's really developed. Obviously derivatives and other such products are common place and leverage offerings. So let me give you an example of what they've done in Japan. So the Japanese have come up with the SRO, the self-regulating organization model. So the Japanese Financial Services Agency, the FSA, they gave the cryptocurrency industry self-regulatory status, permitting the Japanese Virtual Currency Exchange Association to police and sanction exchanges for any violations. Look at what's happening in the US with the potential stablecoin regulation. Now, the stablecoin issuer isn't an exchange, but there's a suggestion that stablecoin issuers should be fall under banking regulation, which is such a heavy lift compared to in Europe, where we see stablecoin issuers as payment instruments and regulated under payment infrastructure and regulatory clarity rather than banking. So anyone on a panel want to sort of chime in with their view as to what the right regulation is for a crypto asset exchange? Jeff, you are down there doing strategy at Huobi. What's the folks in Singapore think is the right model?
Yeah. Regulation, sure. That's the topic we're always caring about, right? When we're doing expansion, when we want to go into a new market, the first thing we think about is what is legal, what can we do here, what kind of products can we offer here, and then how can we, adhere, work with the government closely? Do we have any relationships there? What are the rules, right? This type of stuff, right? So Hobi's always been really closely following regulatory policy, right? We're working with a lot of different regulators and all over the world, right? Like we were one of the first ones to get the licenses in Japan and Korea, right? We're all, especially in Asia, it's a lot easier for us since our major like headquarters and stuff has always been in Asia, right? But to your question, where regulation should be headed, we want to kind of see it like this. Regulation is there to actually protect users, right? When the governments are regulating the assets and different kind of financial products, it's really to help, protect where the money's coming from, right? Protect how users are using these products, how we should be, taxing it and that type of stuff, right? But this overall, it's good for the ecosystem, right? When you're regulating it, it becomes more legal, it becomes more available to, just like, a lot of large institutions right now, like we mentioned earlier, PayPal and Venmo and stuff like that, Cash App. It makes it very more accessible to them. It makes them more likely to be working with crypto assets, right? It makes crypto assets a more tangible source, a more founded kind of entity, right? So with that, it's good for the entire ecosystem. So for us, we see that regulation is definitely going to be the future. A few years ago, a lot of places were still in more gray zone territories with regulation. They weren't really sure how to regulate, or are we going to work with spot trading, derivatives, mining. They weren't exactly sure what exactly to regulate, right? And then as we see now over the years, even like today, they have a lot of different rules, a lot of different policies out there, but it's good for the ecosystem as a whole. So I think for our stance is we will continue following regulation, and we're also like working, our research teams are really working closely with different countries' regulators to build these new policies, and I think that's going to be the future.
Thank you, Jeff, and thanks for the questions from the audience. I know some of the panelists answered them in the chat, but we'll bring some of them in a minute. But let's turn to Edgar, who works at Bitget, which is a crypto asset exchange, as he mentioned in his intro. So, Edgar, what do you see as some of the popular features on your platform? And what feedback do you hear from your clients? And maybe delve into some recent new features that you've added, and where are the growth areas in these offerings?
Sure. Thank you very much for the question. First of all, I think we cannot speak about future of exchanges without trust, right? And this is something really, it's really important because it's like the base of any relationship. A lot of our users are kind of concerned because sometimes we just establish or promote like put some money here. We have some promotions. You will get some USDT for doing this, doing that. And actually, sometimes we have to say like the whole part of the story. This is for all the exchanges, and sometimes it's really important to speak about also that if you are trying to invest this money in exchanges, there's a risk right there. So in Bitget and in all of the exchanges, we all have nice tools that really helps you with this kind of risks. Risk management is really, really important. And so I just want to create some conscience for the people that really use stop loss, really use take profit features. And also here in Bitget, we have something really new, let's say. Well, it's not that new, but we are the leader in this kind of feature, which is copy trading. But first of all, you have to come up with a thesis. You have to come with some TA, technical analysis. You have to do some DOR, do your own research about investing in a token. So yeah, all the exchanges will have like nice tools to help you create some income. We are really we have really financial tools, but it's up to you at the end if you use it well, right? So yeah, pretty much in Bitget, what we try to do is create that conscience. We are trying to create some content, educational content that will help you with this along the way. And also, I would like to speak about something really interesting you were talking about before. Bitget, that last March we acquired a decentralized multi-chain wallet, and I just want to say from here that we acquired Bitget. It's a really nice multi-chain wallet, and we became, from that acquisition, we became the world's only CeFi and DeFi 360 integrated exchange platform. So it's really interesting how we can combine not only CeFi but also DeFi. Here you have it's like a cold wallet. You can combine it. You can do some BitSwap, DeFi, DApp, NFT storage. So yeah, we on Bitget we are trying to evaluate, and we are trying to go upwards. And I'm just I would like to really create conscience about that. You need to be really conscious about what you're doing in exchanges. It's not only put some money there and let them people do whatever they want with your money. You have to investigate something, and well, that's it on my side.
Well, thank you very much, Edgar. And you touched on an interesting point. Do your own research, and we see a lot of people wanting, unfortunately, to get rich quick and just focus on the retail space. And I think there's been some good questions from the audience, and thank you, Daniel, for your questions. And perhaps to you, Edgar, these questions around education, career counselling. What can exchanges do, and what does Bitget do for, say, the newbie that wants to, join in the party, so to speak, and invest in crypto, but doesn't have any real knowledge or education? Do you provide those resources on your platform?
Yeah, for the new people, for the beginners, I would say, first of all, we have a lot of tutorials. Also, a lot of exchanges have other tutorials to get to know this technical analysis. But for me, it's like a combination of two things. Not only study some charts and stuff, you need to also know what you're doing with your money. If you are investing in something, in good quality projects, or if you are doing some trading just for some income. So it's really, there's a difference right there. If you work with different timeframes when trading. If you are investing, maybe you can put it in some cold wallets like Bitget, for example. And if you are doing some trading, of course, you will have to use shorter time frames. But yeah, just to answer your question directly, we have tutorials, and we have this copy trading feature, which helps you a lot if you have a thesis, or maybe you are starting to this career. Maybe you can confirm your thesis by following more experienced traders. So at the end, it helps you, or it gives you like the push you need to do that trading. But yeah, that's how I think we can help new users for the platforms and exchanges.
Thank you, Edgar. And just to be clear for the audience, nothing we say is any kind of advice.
Not financial advice.
Financial advice. The lawyers always will tell us to disclose this. But I think there's two things. So there's one, for me, we see a lot of vulnerable people getting scammed. So just be very careful. Do your homework. Use reputable exchanges. And also, secondly, the benefits, and this is something that this is a platform that we go to talk to politicians about, is we see a great use case of education, of financial literacy. Before crypto, you talk to somebody, I did an economics degree and used to be a trader in the City of London. People weren't interested in the history of money. People weren't interested in how you calculate APR, or, what is interest-bearing instruments. But I've seen lots of people that don't come from a financial and economic background really start learning these concepts. And I think that's generally good for society. That educational piece can really help folks manage their money, generate wealth for themselves, and be more financially astute. So I think there's a good story there too around this. So let's move on to our fourth question to Jeff, please. So let's discuss how you see your client base, which predominantly your exchange is based in Asia, using crypto. Perhaps talk about the different demographics, what age categories, social economic class, investing, and is it more of an investment opportunity in your region, as I think what we know is the case in the UK, or are you seeing other use cases, folks using crypto as it was designed for in the Bitcoin white paper, a P2P trustless payment network?
Yeah, sure. So first I'll go over kind of like the overall, I guess, our user demographics, right? From our products, we have more of our institutional customers in the Americas and Europe, especially in UK. We have a lot of institutional clients out there. So they're going to be larger, right? But when we're talking Asia, of course, in Hong Kong, Singapore, we also have, a few customers here and there. But overall, across Asia, we really want to focus on our retail users, right? We have a lot of, the mobile penetration in Asia is very high, right? Everyone's on their cell phones, everyone's very active, everyone's very accustomed and educated to technology, right? So they're very active, right? And this is perfect for crypto because crypto is so dynamic, it's always changing. You need to be active, right? And that's why some of our best traders are in Asia because they're online all the time, right? I think I saw a question down there. Should it be 24/7? Should crypto be 24/7? Yeah, when you're trading, you're up 24/7. You set alarms right in the middle of the night to wake up and check on your portfolio, right? But to the question, payments or investment, right? So in a lot of areas, of course, they're using crypto as remittance tools, right? They're sending remittances. In like America, you can see they're starting to buy houses and cars and all types of stuff with crypto as well, right? But I think for right now in this stage, in Asia, it's still going to be more for investment, right? And there's a couple of reasons for this. For one, it's going to be the accessibility, right? So you can imagine, like in the US, we can get a credit card when you're 18 years old. You can start a bank account when you're, even if you have a parent, co-sponsor, like 14, 16 years old, right? But in Asia and a lot of countries here, you don't have access, or the people don't have access to a lot of these financial products, right? And that's what crypto does, right? With crypto, with these different, especially like in DeFi or like all these different crypto products, you're giving people this access. We see a lot of ads, buy Bitcoin with $1, right? You can get APY, right? Just like you said, people are learning about what staking is, what farming is, what is lending, right? You're giving people access to all of this stuff, right? So that's one thing. A lot of people who wanted to invest did not have these opportunities in traditional finance, but crypto kind of opens the world to them, right? They have this accessibility. That's one thing. And we talk a lot about mass adoption. This is one key driver that can help mass adoption, right? By giving people access, by giving people these tools to be invested, right? That's one thing. The second thing is the actual products being invested, right? So, Asians, the Asian community, they're very, like I said, they're very active. They like to jump on opportunities. They're very the education level is very high. They like investments, right? But especially in a lot of major Asian countries, the regulation is so strict on traditional investments that it's very difficult for them to access. But with crypto, you can literally, invest into almost any project, right? Any project built by anyone around the world, you can have access to this, right? In traditional finance, if you don't have the right accounts or the right, net worth or whatever or whatnot, it's hard for you to buy, stocks or bonds or whatever from different countries. However, cryptos can be made by people in different countries, and you can have access. You can be investing. You could be participating in the communities, and they love that, right? They're very active. Okay, and then the third thing is back on accessibility. We talk about what cryptos bring. You see a lot of large exchanges, and Edgar kind of touched on this. They're making light versions, right? It's just like us. We have a light version of Hobi, right? It's making it easy for people to buy cryptos. Literally two clicks, you can get cryptos, right? And these wallet products, just like Edgar also mentioned, we're also launching our Huobi cloud wallet, right? So the cloud wallet does a couple of things, right? Or other wallets, not just our own wallet, but it's a custodian, right? So we're letting users house your own private keys, right? You have access to your own private keys. It doesn't have to be in a centralized location. They might feel safe with that. And then we're giving them this technology to, buy assets cross-chain, right? You can buy assets across any chain, right? You can have access to that. And then the last thing is with liquidity, right? A lot of times people want to buy into a crypto asset or a digital asset, but they don't have the liquidity. But with these wallets that are coming out right now, including ours, shout out, we're connecting them to these exchanges. So you can have the full liquidity of any exchange that you want, right? And get these assets. So in general, we see that the Asian population right now they're taking a lot of advantage of trading of derivative products, of these wallets, of these newly listed tokens, right? You can see that they're more accustomed to buying. You know, we did a lot of product runs. Of course, they're still buying our main coins, Bitcoin, Ethereum, but you see that we've taken a lot of interest in these new projects out. They want to be more involved.
Thank you for that, Jeff. And just focusing on Asia, I was aware of some policy for exchanges actually, excuse me, in South Korea that I thought was somewhat really prohibitive. And I can draw some comparisons with other examples, but correct me if I'm wrong, and I don't know if you know this, but I recall that part of the registration process for a crypto asset exchange in South Korea was that they had to have a banking relationship with one of the major South Korea banking institutions. And that's quite a heavy lift, because I know in the UK, I can't speak for South Korea, that getting a relationship with a bank for any crypto asset market participant, exchange, custodian, trade body is absolutely impossible, because there's just no risk appetite at this time. Is that your understanding, Jeff, or other panelists?
Yeah, I mean, the policies has changed, like you mentioned, over past couple months. There's been a few changes, but I think when you think about it, is the most inherent reason of why they need to do this, right? It's all about KYC. So KYC has always been a very focused issue in South Korea. They want to know who's buying, who's selling, and they want to kind of keep track of all the assets involved, right? So with this banking relationship, before it was more so when you're with a bank, you're KYC'd, right? So that way it makes the process more easier. But like you said, because it's requiring this new barrier, it is a little bit harder for other people to be joining. It's definitely a longer process than before.
Okay. Well, excuse me. Well, thank you very much for our panelists. I think we're coming to the end of the session, but before we wrap up, let me go around each of the panelists and perhaps start with you, Oliver, to get your crystal ball out and tell us, what do you think the crypto asset industry in general, and you can focus on exchanges or just generally, it doesn't matter in your answer, where do you think things will be in 12 months from today? If you don't like the 12-month time horizon, you can shift it out to 5 years. It's up to you.
Yeah, I'll shift it out, because 12 months, I have no idea. I mean, people have been buying pictures of gorillas for $2 million in the past few months. So really, I have no idea what's going to be happening in the next 12 months. But next 5 years, I'd say that we're going to have a shift in terms of the main, I wouldn't call them trading venues, but the main markets. There's going to be a shift towards hybrid decentralized finance. So what I mean by that is that you have DeFi-like infrastructure, which could look like automated market makers or lending pools and all of that, but with kind of a KYC layer, institutional layer. You already have that going on. Aave's trying out its beta for its institutional pool. I mean, it's benefiting from the savings incurred by DeFi infrastructure, while still having a centralized entity doing some supervision, some KYC. Not everything decentralized. And this is what also Binance is looking at. I mean, we heard about, I think, Bullish exchanges working on that. You have a lot of venues working on that. And I think this is what we're moving towards slowly.
Yeah, I tend to agree with that, Oliver. I think you might see this, hybrid of the best of both worlds, the benefits that the innovation and, these new business models, corporate structures, DAOs, and you talked on, AMNs and the benefits they bring, less slippage, access for long tail assets. So let's now bring Rod in. Get your crystal ball out, please, sir. Where do you think things will be in the not too distant?
Again, I think it's easier to give a longer term outlook rather than a 12-month prediction, right? But I will agree with Oliver. I think that and I hope actually that we will actually get the best of the two worlds, right? And I think that what will a transformation that we will actually see is adoption. More and more, let's say, this will become the normality for many people. More and more, this will, the crypto world will become the way in which people actually manage their money. So it's not only, let's say, the cool investment that you enter because you want to make money quickly, but it's the way in which actually you can manage your whole financial life. And I agree in the fact that probably what we will see is the creation of micro or macro, let's say, walled garden environments where once a customer is KYC, can actually leverage or fully leverage the decentralized, let's say, nature of this technology to basically do everything he wants with his money.
Thank you, Rob. And will we see a Revolut of a institutional offering equivalent for access to DeFi for institutional players in the not too distant future?
Yeah, I cannot really answer to that, right?
No, I'm sorry, I couldn't help myself, but naturally,
absolutely,
you're speaking for yourself. Well, I know from the folks at Arvo that they're talking to institutions, so this is probably not too far away. Okay, the same question now to Edgar. What do you think is coming down the pipe?
Well, this is a really tough question, actually, but I really see massive adoption in the next 12 months. I see a lot of institutional also money coming into exchanges and other platforms, crypto platforms. So I really see, and I think it will be just as Oliver said, it's going to be a combination to DeFi and also CeFi in certain way. And I think a lot of people will not only invest in crypto, but they will try to store their money in crypto, because a lot of our tokens are good quality tokens, and they have use cases right now. So yeah, I see massive adoption. I'm in this environment since a while, and this is the first time I see a lot of devs, a lot of devs working really hard in a lot of ecosystems. Just to mention someone, not to make them promotion, but for example, I love Solana, Avalanche. I know a lot of devs are working really hard in this kind of devs. So yeah, pretty much I think institutions and this kind of great whales, they will realize there's a huge opportunity here, and I see massive adoption in the next year.
Yeah, thanks, Edgar. And from my side, actually, that's not fair. I should go to Jeff first. And just a big shout out to Jeff. He's in Singapore, so that's +7 CET. So I'll let you guys do the maths. So well done. A bit extra shout out. And now your turn to tell us where the future may take us.
12 months, Bitcoin's gonna be at 200 grand, guaranteed. I'm just kidding. That's personal view. No, yeah, I think I'm bullish on DeFi. I think DeFi just has a lot of possibilities, right? You're giving people the chance to, especially with collateral and staking. A lot of people around the world never had the chance that they're making their money work for more, right? They're working for more. They have money. They're holding it, and they can make more money with it, right? That's just investing in drone, right? But it's a lot of people never had this opportunity, and there's just so many possibilities in DeFi by offering people these services, even derivative products, double lending, this type of stuff, right? And then the second thing is, I think with NFTs and the metaverse, I think a lot of it's based on the art aspect right now, but I think coming forward, it's going to be more, it's going to really connect the digital and the real world, right? You can be using it for authentication, supply chain. I think a lot of major brands are going to be starting to adopt it, bring more people into the crypto world that way. So I think these two things are really going to be, top winners right now in the space.
Yeah, thanks, Jeff. And it would be unfair of me to ask you folks what you think the future is. And so, from my side, I do see a great amount of institutional focus. And when I go to events, this is demand led. All of the tier one institutions want some form of access. And with that will come a whole slew of new innovative developments and infrastructure building. And one would hope that we see perhaps a two-tier system where you can play around in what is the DeFi space now, with perhaps some better protections for consumer harms, whether that be front running, miners expecting value, or that be for price manipulation, or in asymmetries of information, or smart contracts falling over, code locking up funds, for example. But also for those institutional players that have a heavier lift that need to get things through their compliance team, and there'll be products and services for them to operate. So I think that's a wrap. All that remains is me to thank our 4 panelists. Thank you so much, folks. And I will hand back to our hosts. Thank you and goodbye.
Thank you, Ian.
What a good way to
Thanks,
finish today. We thank you very much for staying. We had almost 40 or 50 speakers all along today. So thank you very much to all of them for being here and sharing all these experiences. And to the audience, thank you once again for being with us. I hope tomorrow you can join also. We start a bit early. Tomorrow we start at 11:45 Central European Time. Just one thing I wanted to mention is that European Blockchain Convention is a good way to learn stuff and be connected to the latest news in the industry, but it's also a great way to networking. We're using Brella to follow all these sessions, but also because you could connect to anyone on the Brella platform. So you can go to the People tab, and then you can reach out to anyone there and suggest meetings and have meetings on the Brella platform. And I think it's a awesome way to get to meet peers in the industry. So Ian, Jeff, Oliver, Edgar, Rod, thank you once again, and I'll see you around.
Thanks, everyone.
Thank you.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.